So in today's video, I'm going to show you how I saved a marketing agency $15,000 in taxes in only 12 months. Now, I'm a certified public accountant and the owner of a tax technology company. Every year, my company and I help businesses all over the United States identify the most effective strategies to save thousands of dollars in tax. A lot of the information you read online talks about tax strategies and loopholes without actually really showing you real life examples to support those ideas and those strategies. Today we're going to do exactly that. We're going to break down the strategies we use to save a marketing agency over $15,000 in 12 months, and the best part is you can do this as well. Stay tuned to hear how you can save thousands of dollars in taxes. Let's dive into the video. So to set the scene here, I just want to introduce you to our case study, the partner that we're working with. And his name was Alex. He came from the corporate world doing digital marketing in a corporate world as a W-2 employee and decided to go out on his own and become an entrepreneur. So he dove into this idea of entrepreneurship, and he had a background in online marketing. And as he was looking to get out, he was thinking, what kind of industry, where can I focus and utilize my skills? And he had truly a really big passion for healthy eating. And he thought about, okay, how can I take this online marketing experience and knowledge that I have and help out those that are into healthy eating? And so he started a consulting businesses for influencers that focused on healthy eating and how they can increase their online presence and how we can do that. And so that is how Alex started. Went from the corporate world into entrepreneurship, specifically helping influencers increase their online presence utilizing his digital marketing background, and they happen to be in this healthy eating space. And when Alex first started out, he started out as a sole proprietorship because he just wanted to hit the ground running. He knew that he had a really good opportunity here, and he was really knowledgeable in this space and really passionate about it, and he just wanted to hit the ground running as he was exiting his W-2 job. Now, Alex had really quick growth. In year one, he picked up a few big influencers that were taking up a lot of his time and producing a good amount of profit. And so he had very little overhead, just a few software subscriptions here and there, which led to really high profit margins for him. And so in year one, after quitting his W-2 job, Alex was able to generate roughly around $100,000 in profit in year one. And so when we looked at Alex's situation, we needed to really start this process around tax savings. And, he was going through questions like, how is my business structured? And, what expenses are involved with my business's day to day? And, is there expenses that I'm paying for personally that are business related? And how does that really work? And should I be saving for retirement? Because as a W-2 employee, he was never used to doing that before. And so all these kind of questions that Alex was going through and really having no idea where to start led down a path to find out what's available to him, what strategies are out there, what's available to him now as a business owner. Because as a W-2 worker, he didn't have to worry about any of this. Taxes were taken out. There was no opportunity to save on taxes. And so he just wasn't used to that transition. And so some of the issues, and this really kind of came to Alex quickly, is in year one, he got hit with a monster tax bill. Again, not used to doing this, not used to being a business owner, coming from a W-2 world. He got hit with a tax bill that he wasn't quite ready for. And he felt like, dang, my business is doing really well, but I'm giving it all away in taxes. I'm having a great business, but I feel like everything that I'm doing is going away in taxes, and what I'm left over with is very little. And that doesn't seem right. And so, being a business owner, a new business owner, a new entrepreneur, he didn't know where to start. He didn't have, the time and energy to go out and do all this research into these tax strategies he could implement, and all these various different things. And even the little bit of time that he did have going down these tax strategy routes, he was getting conflicting information. This source says this, but this source says, no, you can't do that, but you can do this. And he was talking to friends, and friends would say this, and others would say, no, you can't do that. And he was getting conflicting information, which was just causing, a lot of stress for him, and to the point where he's like, okay, I don't really know what to turn. And so he got to a point where he was just figured, like, maybe I'm just too small. My business, I'm only making $100,000 a year, so maybe I'm just too small for tax savings. And he also got to a point where the effort and time that he was putting into learning about this was like, I don't think it's worth it. I'm going to spend 3 hours looking into this or 2 days looking into this when I could be growing my business. Is it even worth it for tax strategies? And so he got to a point where he's like, I'm just going to give up. I'm either too small, I'm getting conflicted information, and the amount of time and energy I'm putting into these tax strategies to learn them, I could be putting into my business and helping grow my business. And I don't even think the savings is worth that time and energy that I'm putting in. But then Alex found TaxElm and found the potential that TaxElm can make this process so much easier for him and so much more efficient. And so within the first year, in year one, we were able to save Alex over $15,000, specifically $15,458 in taxes in year one of utilizing TaxHelm. And then over the next 4 years, his business continued to grow and he was seeing really good success and he was putting some of those savings back into the business. And over the course of 5 years, with that business growth and implement these different strategies, we were able to save Alex over $132,000 in taxes. And again, this is on income roughly around $100,000 in profit. And the cool thing about this is we were talking to Alex and we were able to say that he used these savings that he had to put that money back into the business, to help his business grow, to pay off debt that he had accumulated, whether it's personally or through the business, and various different things. And that was one of the funnest things to see with Alex is what is he going to do with these tax savings? So provided massive tax savings that now it didn't feel like all this effort and work that he was putting in was going to the IRS or was going to the state government agencies. He actually was able to keep a lot of that money and be able to utilize it to put into his business to continue that growth. So let's kind of talk about some of the solutions. What did we do for Alex to produce this $15,000 tax savings in year one and produce this $132,000 in tax savings over the course of 5 years? And remember, a lot of these strategies that we talk about, they're not just one and done savings. There are tax savings that you're going to see every single year after that he set it up. So the first thing that we started with Alex was we changed his entity type. So, we changed the foundation of his business. And, he just hit the ground running. He started as a sole proprietorship and was like, that's probably fine. So he just hit the ground running with that. But we didn't realize is some of the tax impact of that decision. And so we started out with an S corporation. We got him set up as an LLC and we organized his business as an S corporation. What this allowed us to do was to cut his self-employment tax bill down a bit. So before we did this setup, he was paying self-employment taxes on 100% of his income. But now that we organized him as an LLC and taxed it as an S corporation, we were able to split that income into two pieces. One, he took a reasonable salary as the owner of the S corp, which is required, and that he was paying essentially self-employment taxes on. But all the income over and above that salary, he didn't have to pay self-employment taxes on. So let's say he was at $100,000 in profit. We say, okay, what reasonable salary for you is $40,000, $50,000 or so. We're paying self-employment taxes on that, but we're eliminating self-employment taxes on the remaining amount. So cut his tax bill, his self-employment taxes alone in half or more. And so that was one of the big solutions there. And Alex knew and heard about this idea of an S corporation, but again, he didn't know if he qualified. He didn't know how to do it and was getting conflicting information from various different people. The next thing he did is we looked at the home office and we said, Alex, you have this home that you're living in and that you're working out of. You're going to have these expenses no matter what. But how can we get a business deduction for that? So we set up an accountable plan and we utilized that accountable plan to reimburse himself for this home office that he was utilizing in his business. And this was another one of those areas where he said, Mike, home office, a lot of times, people say that's bad and the IRS doesn't like it and different things like that. And I said, Alex, that's simply not true. The home office deduction is a deduction that's available to you. Again, there's no extra cash out of your pocket to get this deduction, but you were missing out on that home office deduction because you were not taking it initially. So we implemented a home office for him. We noticed that he was also going to client meetings and running errands for the business, doing all these other things in his personal vehicle. So we utilized the accountable plan to reimburse him for automobile expenses that were related to the business. Again, it's a vehicle that he owned anyways, but now he's getting a deduction for the business use of that automobile. And we talked to him about this idea of maximizing deductions. And maximizing deductions is not saying he's going to go out and buy all these different things and just get a tax break for it. Things that he doesn't really need, a new truck, a new computer, a new desk, and all these different things that he doesn't need, but he just wants to get a tax deduction for it. We said that's not what we talk about when we talk about maximizing deductions. When we talk about maximizing deductions, we're saying let's look at the spending that you're already doing. And is there a way that we can find a business purpose for that spending and turn it from an after-tax spending into a business expense and get pre-tax spending on that? And so we talked through this process with him. We said, meals expenses. How can we figure out, you're meeting with friends, you're meeting with family, you're meeting with all these different things, but you're just talking about business. You're talking about business with these people. They might even be clients of yours. Let's make sure we're recording those as a meal expense within your business. We looked at travel and said, okay, we're doing traveling. You're going to seminars and there's different trainings around the world and you have clients across the country that you're visiting. Can we work some of that travel that you might be doing with your family anyways, but now get a business deduction for it? Can we wrap in some of these visits to vendors, to clients, to employees, to trainings and seminars? Can we wrap around those with travel that you might want to do? And we talked about a few of those things. He had a family trip that they were doing down to Disney, and there was a seminar that was going on in Disney. And he said, well, how can I organize those to make this at least partially a business deduction? So we looked into this idea of maximizing deductions, maximizing meal deductions, maximizing this idea of travel in associating with his business, which produced great expenses for him. He also had a computer, a desk, and all these things that he set up in his office that, he wasn't used to writing off because he has a W-2 employee. He was working from home, but he didn't get any deduction or tax benefit from these things that he set up in his home office. But now as a business owner, he did. And so we kind of opened up this idea and opportunity that was available to them. We also talked to him about setting up a board for his business. As a business owner, it can get lonely at times. And we wanted to make sure that, one, Alex was set up with people supporting them and keeping him accountable to help him grow his business and have an outside perspective of his business. But as setting up that board, it also opened up the opportunity for travel and different meal expenses. Alex put on his board all of his family members who are very close to him, his brothers, and some close friends that were advisors of him. And so now when he was holding monthly board meetings with them, where it was creating business deductions, which opened up the idea for this 14-day home rental rule or Augusta rule, because a lot of those meetings that he was holding at home, but he wasn't getting any kind of deduction for them. And so we talked to him about the 14-day home rental rule, where you can get a business deduction, pay yourself rent. As long as your total rent is 14 days or less on your personal residence, you don't have to pay income tax on that income. So now he's getting a business deduction and not having to pay income taxes on this by setting up this 14-day home rental rule and to hold his board meetings at his house. Now, of course, with all these strategies, dot our I's, cross our T's, make sure we're doing things correct and legitimately, but we worked with Alex on that. The other thing Alex was concerned about is retirement. He goes, I've never had to worry about retirement, but what was available to him? So he looked into different retirement options and setting up a solo 401k for him so that he could put money away towards retirement. Another item that we talked about with him was a health savings account. He currently wasn't using any kind of health savings account because he said, I'm healthy. I don't need a health savings account because I don't have expenses. And we talked to him about this idea about a health savings account is a gift that the IRS gives us that is better than most opportunities we have. We get a deduction when we fund a health savings account. The money within an HSA grows tax-free. And when we utilize those funds to pay for qualified medical expenses, we don't pay taxes on it. And so that's a win-win-win situation that we don't rarely see with the IRS. And so we talked about how health savings account doesn't have to just be for health costs. Think of it as like a secondary retirement account. At some point, you are going to have health costs in your life, and you might as well use tax-free money to fund that versus paying taxes on money and then paying for those health costs down the road. He also had health insurance. We talked about with S Corp, what's the proper way? As a self-employed individual, you always get a deduction for self-employed health insurance. So we walked him through that process. And, with all this, he started to also look into estimated taxes and, how can I pay estimated taxes just to make sure that there's no penalties and things at the end. So we talked about all these different solutions, whether it was setting up an S corporation, making sure that Alex was implementing a home office in his business and taking advantage of an accountable plan and automobile expenses that he was using his personal vehicle for that were business related. We talked about maximizing deductions and how we can try to, every time we swipe a card, think of, is there a business purpose for this? If so, let's run it through the business and get that tax advantage for it. But let's not go out and spend and buy things that we don't need just for a tax deduction. We want to make sure that was very clear. That's not what we're talking about. We're looking at, let's look at current spending and is there a way we can find a business purpose and move it into a business deduction. We helped Alex set up a board for his business and also implement the 14-day home rental rule to utilize his home for those board meetings that he was having on a monthly basis. Not only did this help his business, so much by having an outside advisory board for him, but there was also some really good tax benefits for there. We talked about the different retirement options and which one would be best for him there, as well as funding an HSA, a health savings account, and making sure that he was treating his health insurance correctly. And these were solutions that are available to all business owners, regardless of your income size. They're relatively easy to understand and implement. It just takes time, and we want to make sure that we're doing it correctly. We want to make sure we have the resources to do it correctly. Now, the government, many times, anything that comes to tax savings traditionally is some sort of incentive from the U.S. government. The U.S. government wants people to start businesses. The U.S. government wants people to hire employees. They want businesses. They love small businesses because it helps the economy. It helps our country run. And so part of that the government does is they incentivize small business owners by saying, here are the deductions available to you. The home office deduction is a deduction available to you, and that's the government's way of incentivizing business owners to utilize and start businesses. Now, the government doesn't come knocking on your door. If Alex didn't implement the home office deduction, the government's not going to come in and say, hey, Alex, you forgot your home office deduction. They wouldn't do that. But they give the incentive there. The opportunity is there. It's just up to him as a business owner to learn what incentives has the government given him and then correctly implement them. So TaxHelm was a really core piece to implementing all these strategies and saving that $15,000 or more in year one and saving that $132,000 in taxes over the course of 5 years and seeing what that tax savings can do for both him personally and his business and the growth he got that. So he utilized TaxHelm to enable that. TaxHelm gave him an in-depth understanding of, okay, what do I need to know about taxes? And specifically, what strategies are relevant to me? Because when Alex goes out on the web, he finds out all these different people are talking about tax strategies, and there's so much out there, and he's like, I don't know if this is relevant to me. I don't know if I should be doing this, or if that's for somebody else, or whatever it might be. So TaxHelm helped him understand, bring him into ground of, okay, what is actually available to me? It allowed him to find the specific strategies to him, how to implement them, very simply walk through those strategies, step-by-step implementation of how to implement them. And he also had our entire team of tax experts at his side to lean on, to ask questions, to run by people, to do his annual consultation with, and he used us as his tax planning team. You know, Alex said to me when I was having a talk with him, and he said, you know, really having you guys there was like having a tax accountant in my back pocket. Anytime I ran into a roadblock, I had someone to lean on to, and I knew that I could implement these strategies because even if I hit a little bit of tweak, you guys would iron that out for me, and that was super helpful. Now, Alex could have done this on his own. You know, these strategies aren't groundbreaking. They're not something that nobody's ever heard of. These strategies are just government incentives. The IRS code has them listed out. You know, Alex could have done this by watching our YouTube videos, listening to our small business tax savings podcast, reading blogs from other people. He could have started to learn these types of strategies. He could have read the information on them and found out, okay, you know, here's the strategy, understand it. Then he could have taken that information, started to piece it together and say, okay, here's also what I need to help support that, back it up and support. And Alex can spend the time to do this, and these strategies are out there. We put a lot of information out there to help people understand it. But the problem with that is that it just takes more time. It takes more time and effort for especially Alex, who was a solopreneur, running a business on his own, who wanted to grow his business. He didn't have that time to fully learn a strategy, also learn out how to correctly implement it, and then see that through tuition all on his own. He needed that guidance, and that's where TaxHelm can come into play. You know, we have a tax savings blueprint. This is that source that says, okay, based on your information, here's your activity, here are the strategies you don't need to be focusing on. So instead of Alex wasting time learning about a strategy that might not even be relevant to him, he had very structured ideas of here's where he needs to put his attention. We have a full training library. That training library has videos, content, downloads, templates, guides, all sorts of things that makes it very easy to pick up a strategy and implement it all in one sitting. We walk you through step by step for that. We also have unlimited access to tax experts. So as any question pops up around tax planning, tax preparation, accounting, you have unlimited access to our team to reach out to us. Think of it as like having a tax strategist in your back pocket. We also do an annual comprehensive consultation. We deep dive into your situation, answer the questions you have, help you implement anything you might need to right on that one-on-one live consultation with you. We also do an annual tax return review. We look at your prior year tax return to see what are different things that we can pick out and choose that would help you save even more in taxes. We do monthly webinars and trainings to help continue to drive home this idea of saving taxes. We also have a partner directory. So if you need to set up a retirement account, if you need anything business related, we likely have a partner that's vetted, trusted, that we can get you introduced to. The goal of TaxHelm is to say, how can we help you pay the least amount in taxes legally possible? That's my passion. That's what we helped Alex did. And that's what we're helping thousands of business owners across the country do by looking at these tax strategies and correctly implementing them, because that's the key thing. Implementation, understanding the strategy is one thing. You do not see any tax savings until you actually implement that strategy. And I also want to put the emphasis on implementation is one thing, correct implementation is the key. So you now know the blueprint I use to save a marketing agency tens of thousands of dollars, and you can start implementing it yourself. there's a lot of details I haven't been able to cover here. If you want to make instant savings, are looking for a tax savings blueprint, or want to have unlimited access to tax experts, click the link below to get started.